October 6th, 2025. Do we do roll call?
No.
Okay.
No, just public comment.
Are there any public comments? I guess not. And next is review the fiscal year 2025 audit. It's up to Tori now.
Okay, so my name is Tori Cruz. I'll share my screen here first before I get too carried away. I think this is probably going to show you at the same time, but I can make it bigger. So if I'm looking all around, I apologize. My camera's up here, my notes are down here, and then the audit presentation's up here. But anyways, my name is Tori Cruz, and I am the auditor that was in charge of the City of Manistee audit for the fiscal year. I've been the auditor in charge for, I believe, the last 3 years, and then I worked on it the 2 years prior. This will be my last year working on it as I step away from government audits, but Ken Talsma, who is the partner that's in charge of the audit, he's not here with us today, but he has been the partner in charge for quite a few years, and he'll be the one that will be stepping in and taking over. So briefly, the purpose of today's meeting is to give you a brief overview of the financial statements. I'm going to go into a little bit about government financial statements as a whole, because I do believe there's a few of you that are new to the audit committee, and then for those of you who are have been through this presentation before, it's always a good idea to just do a little bit of a refresher, because government financial statements are a little bit of a different animal. And then go through any audit findings that came up, any significant adjustments that were made, anything along those lines. So when we conduct our audit, the scope of our audit is to conduct an audit in accordance with generally accepted accounting principles, and specifically for local governments, government auditing standards. So the audit covers the basic financial statements. So I'm going to just scroll to the table of contents here. So the financial statements cover the basic financial statements, which include the government-wide financial statements, which I'll go over in a little bit more detail what that means. The fund financial statements, which consist of governmental funds, our proprietary funds, and fiduciary funds. It covers component units, although we are not the auditor for all of your component units, the Housing Commission being one, we don't perform that audit, and then the DDA, the Manistee DDA, is an entirely separate audit that has their own audit report. The notes to the financial statements, which provide more detail, the required supplementary information. So required meaning that the standards require us to present the information, and this consists of the pension, information on your pension, and then budgetary comparisons for the major funds, major governmental funds, which are the funds that are required to have a budget by the state of Michigan. Supplementary information, we don't perform auditing procedures on it per se, but it provides detail to the front statements, which you will see. So this is kind of the summation of various funds to come up to a total number that you see in the front of the financial statements. When you conduct a Yellow Book audit or an audit under governmental auditing standards, you are required to not only report on the financial statements and the numbers that are in it, but you're also required to report on compliance with the government auditing standards, and this also includes those compliance requirements that are set in place by the state of Michigan. So that's kind of what makes up the financial statements and what we conduct our audit based on. So a little more information on the compliance testing. So this also covers internal controls. So when we conduct our audit, we do test internal controls at the organization, and anything that were to come up, whether we consider it to be significant or not, is communicated in various ways. And we'll get to that at the end, but I just wanted to touch on the internal control piece too. So we do look at that. The auditor's responsibility is to express an opinion on whether the financial statements are presented fairly in accordance with generally accepted accounting principles. So that is our sole purpose of an audit. Our audit is not to try and find fraud. It's kind of a misconception in the auditing field that is not our main goal. We are just testing to make sure that the financial statements are presented fairly. So I'm going to pull up here the independent auditor's report. So the independent auditor's report starts off with our opinion. So for the year ended June 30th, 2025, we gave the City of Manistee an unmodified opinion, which is also known as a clean opinion. And this means that the financial statements were presented fairly in all material respects as of June 30th, 2025. So the basis of our opinion here is kind of going over what I had already mentioned, and what we conduct our audit based on. The responsibilities of management for the financial statement. So although Anderson Tackman prepares the financial statements, we prepare them based on the information that is provided from management, from the city. So those numbers and whatnot, we're just preparing it based on that information. So ultimately, the responsibility of the financial statements falls with management. It does not fall with the auditors. And so that also includes the internal controls, making sure that they're designed, properly implemented, and properly maintained and improved upon when recommendations do occur. Something relatively new over the last few years is we are required, or management is required, to evaluate whether there's conditions or events that could raise substantial doubt about the city being able to continue on beyond a year. And there's changes that, someone have a question?
No.
So there is some GASB standards that are changing that definition of a going concern. I don't expect this to be an issue or anything that the city is going to have to worry about, but it is something that you are required to evaluate, making sure that there's enough reserves to cover and you have those healthy fund balances, which we'll get into. The auditor's responsibility for the financial statements. I'd like to just go over these bullet points here. The one thing I like to touch on is that we are looking for material misstatements. So when we conduct our audit, we are not looking at every single transaction that runs through the city. We're sampling, we're testing from a risk-based approach. So we perform this risk assessment procedure and we determine what areas of the city are riskier in terms of possible misstatements. And this could be just simply from an error. It doesn't necessarily have to be from fraud. But we're only looking for those things that are material, that would lead a financial statement user to be misled if the number weren't adjusted. So we're not providing absolute assurance. So there's always that guarantee that even though we're conducting an audit, there's always a chance that material misstatements do exist that aren't detected. However, we do design our tests and thresholds, and the standards really make it pretty thorough. So I'd just like to touch on that just to make sure that everybody knows we're not looking at everything, and we are considering risk in the areas that we do look at. In performing an audit in accordance with generally accepted auditing standards, we are required to exercise professional judgment and maintain professional skepticism throughout the audit. So I like to mention, although I have been in charge for the last few years, we do change the underlying staff from year to year as it becomes efficient to do so, to make sure that we maintain that professional judgment and that professional skepticism so that we can have fresh eyes, take each year as its own year and try to think of things beyond the relationship that we already have. So we are required to do that under auditing standards. We identify and assess risks of material misstatement of the financial statements, and design and perform audit procedures to respond to those risks, as I mentioned. Our procedures include examining on a test basis evidence regarding the amounts and the disclosures that you'll see in the financial statements. We're required to obtain an understanding of internal controls relevant to the audit in order to design our audit procedures. But we do not actually express an opinion on the effectiveness of the internal controls. So we test them, however, they are not included in our opinion. We evaluate the appropriateness of accounting policies used to make sure that they're reasonable and they're in accordance with GAAP. And we make any recommendations that we feel are necessary when it comes to accounting policies. And we conclude whether or not any conditions or events that have been identified by management about that raise a substantial doubt about the ability for the city to continue on beyond a year. We are required to communicate with the city council as a whole regarding the planned scope and timing of the audit, significant audit findings, and certain internal control related matters that we identified during the audit. So before the audit started, I had sent the audit and our requirements are, and then there will be another letter that I will bring up here at the end of our presentation that kind of is that communication that we're required to communicate. I'm not going to spend too much time on these two. This is just kind of giving an overview what the required supplementary information is, how we perform procedures there. Same thing with the supplementary information. And then the other reporting, as I mentioned, on compliance that we're required to report on for government auditing standards. And we'll get to that at the end. The first section of the financial statements is the management's discussion and analysis. I'm not going to go through this today, but it is an area where I do recommend that you kind of read through based on the copy of the draft that you have. It gives an overview of the financial performance of the city. It's very, I think, reader friendly for the users of the financial statements. But I'm not going to read through all of this. I'm just going to touch on the other areas as we go here.
Tori, just so,
yes.
So you know, we weren't, the committee here, weren't aware. We were sent an email with the draft of the audit. So as you're addressing this, please don't assume we've looked at it.
Yeah, and that's okay, but I'm also, I don't want to sit here and spend, an hour reading the financial statements when you're always welcome after the fact. If there's something I touch on and you jump back into this and you look at it and you're like, hey, I have some questions on it, you are free to reach out to me after the meeting. So I'll try to, I definitely will take it from an approach of, I understand you guys didn't look at this quite yet, but I just am not going to read it verbatim, is more what I mean. Let me move this here so I can scroll through these a little bit quicker. Okay, so before I get into the financial highlights, I just want to give a brief overview of how government financial statements work. So this statement here, the statement of net position, this is the government-wide financial statements. So when you perform a government audit, the fund financial statements, so funds, there's governmental funds and there's our proprietary funds. And On the government fund side, these typically are made up of special revenue funds that are areas or funds that have a specific revenue source that is what funds the entire fund. We have the general fund, as we all know, which funds the primary operations of the city. There's capital improvement funds, which hold the revenue, whether it be from bonds, grants, to fund those planned capital projects that the city has. There's debt service funds that fund certain bonds. Some cities have a debt service fund for every bond that they or debt that they have issued, and this is what funds, whether it's transfers in from other funds to pay for the debt. Although debt service can really come out of any fund. And then there's permanent funds, which you guys do actually have, and permanent funds are legally restricted, where you can only use the earnings on it, and then anything that's in it as principal, depending on what restricted those funds, typically you can't touch that, and that's your oil and gas fund. But those are the types of governmental funds. Yeah. And those funds are presented with a current focus. So current meaning 1 year out. And we call that the modified accrual basis of accounting. So it includes accounts receivable and it includes accounts payable, which are expected money that's going to come in the next year, or expected funds that bills you're going to pay in the subsequent year, but they don't include anything long term, such as your capital assets, net pension liability, long-term debt. Those aren't at the fund level. At the government-wide level, that's when we, as auditors, when we prepare the financial statements, we do a conversion. So we take something that's on the modified accrual and we turn it to full accrual, and we pick up those long-term assets. So that's what's presented here. This is a long-term focus. So I will pop up here a graphs that we typically use to present the financial information. I'm sorry, Ed, that I didn't get them to you ahead of time, but I just prepared them this morning. But some things to keep in mind before we look at them. Just as Michigan governments as a whole, I think it's really easy to get wrapped up into one, your city, and we see one specific thing, but we're not really thinking about what is the norm across all cities in the state of Michigan. So I just wanted to touch base on that quickly before we look at numbers, so that hopefully it brings some answers or some piece to some that we'll talk about. So most local governments report short-term fiscal stability. So in the short term at the fund level, most cities show fiscal stability. Where the challenges and risks start to arise are in growing long-term. And the reason is because for state revenue sharing, we are continuing to see a decline in that, which Ed mentions in his financial outlook part of the MD&A that I encourage everybody to read after this. The growing pension and OPEB liabilities, which we'll touch on. All local governments in Michigan are seeing this growing net pension liability. Planned or unplanned infrastructure repairs and replacements, and trying to get those projects scheduled and conducted on time, and the cost that's incurred with those. And then just overall rising operating costs, and we see the impact of inflation and the limited revenue flexibility. On the same side of revenue, property taxes, so we talked about the revenue sharing, and we're seeing decreases across all local governments. But property taxes, so there's state regulations in place that limit how much you can really expand on tax revenue. So that's an area that although we see that taxable value increasing year to year, that's not an area that can be leveraged as a city significantly to increase revenue. And then inflation, as I mentioned, across the cost, labor, materials, your planned capital projects, everything's just a little bit more expensive these days. Federal and state funding. So I know you guys receive a lot of different grants at the federal level, not anything that's going to push you into a single audit threshold. But you guys do sometimes receive federal funds. One of the big federal sources was ARPA money that came out of COVID, and that's pretty much phased out in 2026. I think at this point you guys have allocated all of those funds to be used, if not already used. So that was a big revenue source, and it also COVID impacted other funding sources. Doesn't necessarily impact you guys, but something to keep in mind. And then many municipalities are facing a funding cliff as we see those programs sunset. In terms of pension, so I am going to go to our pension statements back here. So these are some summary information that we're required to include in the financial statements, but it's going to explain where I'm getting some numbers. So the big number that, what'd you say?
We're looking for the page number.
65.
60.
Oh, 65.
Thank you.
So this information here, the focus is always on your funding percentage. So your goal would always be that you have enough money to fully fund your pension liability, but that's not the reality of it. And that's why it's always presented as a net pension liability. So the total pension liability is calculated based on actuarial assumptions that are determined by MERS. And this includes a discount rate, it includes investment performance, other mortality tables. There's a lot that's involved in the actuarial valuation that determines the pension liability. And then the planned fiduciary net position, that is essentially the assets that the city has through the required contributions by the city, by employees, investment earnings. That is what you guys actually have to fund what that actuarial determined pension liability is. So the goal is to have a funding ratio between 60 and 75%. So you guys can see here, although your funding ratio is decreasing, you're still remaining in that range at 67%. So although the pension liabilities are kind of a tough spot for all local governments, they do set reasonable expectations of where you should see yourself from a funding standpoint, and the city is doing a good job of remaining in that range. With this, there comes the increased annual required contributions that the city is required to make, and this is something that obviously reduces funds available to do other things because you are required to make that contribution having a pension. So I just like to touch base on that here, and in this schedule on page 66 shows the actual actuarial determined contribution that the city was required to make, and then you guys made all of those contributions. If you were short, that falls under an audit finding, and that would be something that the state would come after you for, or an explanation as to why you didn't make that, but no issues there. So that's just kind of a brief on pension liabilities. So that's just kind of an overview of some of the different challenges and things that local governments in Michigan are facing. So when we take a look at this graph here, which is just graph form of the financial statement, so you're not just staring at numbers. So this first slide here shows the statement of net position at the government-wide level. So this is including your governmental activities and your business type activities. So here are our assets and our deferred outflows. There's nothing that changed significantly. Your assets actually remain pretty consistent from year to year. This is the liabilities and the deferred inflows at that government-wide level. No significant changes that due to other governments. That's expected to vary year to year. You can see how that net pension liability grew a little bit. And with net pension liability comes deferred inflows and deferred outflow changes, which we'll take a look at a little bit closer. Continuing to pay down debt. We had just minor new debt this year. I think it was the purchase of a vehicle. So continuing to pay that down. And then those are staying almost identical to the prior year. This is our net position. So this is the area I want to address because I don't want it to be alarming by any means. So when we take those fund financial statements and we do that conversion into the government-wide, as I stated, we have to take in account for the change in that pension liability, the change in any capital assets, and then any offsetting debt. So sometimes that when it presents itself at the government-wide level, we see these deficits. So the net investment in capital assets, that is everything that you guys have that is a capital assets, long-term infrastructure, buildings, equipment, things along those lines. And then it's reduced by any debt that was used to fund it. So that is what your net investment in capital assets is. And that's a section of net position because it's not readily available. It's something you would have to sell those assets in order to free up those funds. Your restricted assets are relatively high, only based on you guys, the city does a good job of properly using funds. And so a lot of those special revenue funds are restricted. For example, major and local street, once money comes into the major and local street fund, it is restricted to be used for Act 51 purposes in compliance with Act 51. So you can't just take money out to fund whatever other project you choose to fund. But that holds true to many of your special revenue funds. They're restricted to the purpose of that fund. Also in there is that oil and gas fund, which is a significant part of your governmental activities. So those funds are restricted. They're restricted to the purpose of the revenue sources that funded it. And then that brings us to the difference of unrestricted. So although the unrestricted shows a deficit, it's not necessarily anything to cause an alarm. Because this is a long-term focus. It's just something to keep in mind for future planning. It doesn't necessarily mean that the city is in a bad financial situation. That comes more when we get to the slide on fund balance in the general fund. That would be more of a determination. The state doesn't care about a deficit and unrestricted at the net government-wide level. It's not something that they really look at. But really the reason why, and I'll show you here in the financial statements, you can kind of see what makes up all the way back here. There is a nice reconciliation that shows you here how we go from having a positive, which made up of these various areas. So we had a positive unassigned, which would be the equivalent of unrestricted, of over $2 million, and how we got to that loss, which this is kind of made up of multiple facets of that net position. But these are the items that impact it, with the major one being your pension liability and the impacts there. So I just want to make sure, when we see this negative unrestricted, that it's not necessarily anything to panic about. It's just something to think about long term more so. Here are the revenue funds from all are the revenue sources from all the various governmental funds across the last 3 years. So we like to look at a 3-year trend just to see if there's anything, declining revenue sources that may be significant for you guys. Your taxes still continue to incrementally increase. Licenses and permits, we don't expect that to vary much year to year. Your federal sources, those are going to typically depend on a specific project that's planned or in place. So we don't expect to see that to be consistent year to year because it is for a specific purpose. State sources, those typically remain consistent at the government level. Local sources, those are going to be vary year to year based on different projects. I know this year was specifically, you guys got a pretty good amount of money. I believe it was from the Community Foundation. Ed, correct me if I'm wrong, for the
Riverwalk.
your riverfront project. So that's expected to vary. Charges for service expected to remain consistent. Fines and forfeitures consistent. Investment earnings can be anywhere. We've seen years where we have a big $1 million loss, but the last few years have been pretty good with the stock market. A lot of your investment earnings outside of your oil and gas fund, which would be the most volatile in the stock market, is interest. So you guys are doing good with those Michigan class investments and the money that you're earning there. Rental income expected to be consistent, and then other revenue is expected to vary year to year based on that. Includes things like reimbursements, insurance claims, donations, things that typically aren't the same year to year. Overall, revenue is increasing at the government level. Expenses are broken down by the function of the government. So we have our general government, public safety, public works, community and economic development, recreation and cultural, capital outlay, and debt service. So everything is pretty consistent. We've seen increase in costs, which we expect, but we also have that increase in revenue to help offset it. No necessarily alarming areas here. Capital outlay, that's going to always depend on the projects you have planned. And then debt service, as you guys continue to pay down debt, we expect to see that get smaller as long as nothing new is issued. So this is where the state of Michigan is more concerned. When we talk about the compliance matters, one thing that they're looking for is if they see a deficit in fund balance at the government level. And you guys, historically, I don't think I've ever personally written you up for a deficit fund balance. So you guys do a good job of making sure that stays positive. That's one of the red flags by the state. So this is your general fund, and this is going to be the fund balance that's going to be watched the most closely. So we were seeing a little bit of an increase there up until 2023, and then over the last few years we've seen a decrease there, and that just means that you guys are using essentially reserve funds in your general fund. The state may reach out after 3 years of a decrease to kind of check in and see, but you guys still have a healthy fund balance. The state recommendation is that your fund balance cover at least 2 months of expenditures. And so you guys are a little bit above that. The percentage of 2 months is a little over 16%, and I believe your fund balance as a percentage of your general fund expenditures was about 28%. So you're still showing healthy in terms of general expectations of where the fund balance should be, because you also don't want it to be extremely high, because then that may not be useful.
Tori, can I jump in for a minute on the slide since,
Yeah.
again, I didn't see these either, but part of that drawdown is two things. One is the spending of ARPA funds, which is part of the reason for that big increase between 2021 and 2022. That was expected to be drawn down and spent. So it's kind of the federal funding influx made a weird glitch going up and then going down. And then the other part of it is cash flow needs for the EDA grant, because that's done on a reimbursement basis. And some of those funds went over to the capital improvement fund and will get reimbursed and ultimately end up coming back into the general fund, a portion of them. So just wanted to clarify that.
Sure. Yeah, and Ed, feel free to jump in as much as I want to know the specifics of every single city and
Right, you
and
don't,
audit
but I don't
work
want the board here to be alarmed that we're
Yeah.
spending money unwisely, but there's other stories that cause that, so.
Yeah, and that fund balance is also impacted with transfers. It's not always just, just spending.
Correct.
It could just be reallocation of money between various funds. That would be a 1-year impact. Now we're going to move forward with the water and sewer funds, which are your 2 major enterprise funds. We also have the marina and the boat launch. They're not as significant, so we don't typically look at those in our graphs. We focus more on water and sewer. So revenue, these are the different revenue sources here. The state grants expected to vary based on any projects. The other revenue this year is significantly higher because you guys had about a $300,000 insurance claim come in for, what's it called, was in the water or sewer fund divide. I'm not going to act like I know my water.
It was in the sewer fund.
Yeah, okay. So that was what drove that other revenue was a big insurance payout this year. And then on the expense side, so for the enterprise funds, instead of presenting it by function like we do on the government funds, we actually break it out similar to a business or a for-profit entity would be. So we have our personnel services, which is going to include costs related to the pension, because that's where a good portion of the pension is. Contracted services, insurance, administration, so that administration is more between funds. And then supplies, which are unfortunately heavily impacted by inflation. Communications, utilities, equipment rent, repairs and maintenance, depreciation, which is essentially the spread of the cost of your capital assets over time, and then miscellaneous. So overall, staying pretty consistent there with your total expenses. Outside of supplies, no major fluctuations there. I know in year 2024, which I'm not sure why these are in not the correct order, but we had some reallocation of how we classified, which happens sometimes. We reclassify how something, it may have been under miscellaneous 1 year, and then we better classify it. So sometimes those are what cause an increase or decrease. So that's what I have for just overall financial performance. Jump back into the financial statements here. I'm just going to very briefly go through the notes, any important notes, and then I'll get this wrapped up here. So the notes to the financial statements provide more detail to the numbers up front. I'm not going to spend time on cash and investments, but if you're curious what makes up a number, this is always going to be a good place to start. I wanted to take a look at the pension footnote. I wanted to show something else here. So this goes into detail about your MERS pension, which I'm focusing mostly on the MERS pension because that's your big one. The other pension held by the city is not nearly as significant. And then your OPEB liability has become so immaterial over time that we don't even include it in the financial statements anymore. But I'm only going to spend time just looking at MERS briefly. Okay, don't know why we went that far. Okay. So this footnote goes into good detail in terms of the different actuarial assumptions, the funding policy, so what the required rates are, how many participants are in the fund or in the pension plan. Oh my goodness. I do not know why it's doing that. Okay. Doesn't want me to use the arrow key. So it's also going to show you a breakdown of what makes up the change in your total pension liability in the plan fiduciary net position. I like to take a look at this sensitivity footnote just because it kind of shows you how significant, how one little change could be such a significant impact to your net pension liability. So your current discount rate, which actually went down this year from 7.25% to 7.18%, the way that this is presented, if that discount rate were to increase by 1%, which you have no, you don't dictate this, unfortunately, but you can see how much that would reduce your net pension liability. And then on the flip side, a decrease, which is what you guys experienced this year, a decrease of just 1% would increase your pension liability almost $2 million. So that is a big area that is very sensitive to changes that the city unfortunately can't fully control. So that's why it's important to focus on like that funding percentage instead of getting wrapped up into how big that pension liability number is. Oh, okay. Well, I'm not going to push that arrow one more time. The deferred outflows and the deferred inflows, those are other aspects of the net pension liability that impact the financial statements. It has to do with expected changes, funds that are going to flow into in and out of the city in the future, but it's not an incurred cost yet. So that's kind of what a deferred outflow and a deferred inflow are, and then this is how that is going to be expensed and recognized as a pension expense over time. The other note I want to touch base on is the new accounting standards that were implemented. I guess I'll touch on this restatement here. So we do have in the financial statements from time to time, when we conduct our audit, we either Ed notices an error when he's doing stuff from a prior year that didn't come up in the audit, and we correct that. So for example, there was a duplicate payment last year. Ed corrected it. We made a prior period adjustment to adjust accordingly. The other note here has to do with the Housing Commission, which is typical because the Housing Commission switched auditors this year. So to see a prior period adjustment like this when you have a new auditor come in is not unusual. But when you see restatement, I just like to touch base on that it doesn't necessarily mean anything. It just happens. Things change. New set of eyes notice something that was overlooked in the prior year. So that is where the restatements come from. Then where is the footnote?
Almost 3 million in the adjustment for allowance for doubtful accounts. Ouch.
That's on the Housing Commission, yeah.
Wow.
Okay, so here at note 12 is a summary of, so we did implement one new accounting standard. That was GASB 101, having to do with compensated absences. Based on the city's terms of paying out sick and vacation time, you guys actually weren't significantly impacted by this change. But we did have to implement it. It changed a little bit of the presentation in the notes to the financial statements. But primarily, it impacted how sick time is accrued. So compensated absences is time earned by an employee that is planned to be paid out in the future. So whether it's termination, typically it's termination or retirement. So that money we do accrue for to consider it to be a planned future liability, since the city does pay out unused time on an annual basis. That's why this doesn't impact it too much. But I do like to let you know that we did implement one new accounting standard. Here. So the end of the financials is information already touched base on. So one of the other audit findings that comes up that the city does not have this year, but is budget violations. So the state of Michigan requires that money not be spent unless there is budgeted funds for it. And that only matters for your special revenue funds in your general fund. So capital improvement funds, your water sewer fund, they're not legally required to have a budget, although I know you do for internal purposes, and a budget's always good to still have. But we are required to present the original, the final, and then the actual, and compare it. And anything that would be materially over at the function level. So, for example, the fire department was over budget, but public safety overall was under. So this wouldn't be considered a budget violation. Community and economic development, too small of a dollar amount for the state to be concerned there. So we do consider what's material, what the state is looking at, but you are required to have funds budgeted before you spend the money, as well as all budget amendments have to happen by the end of the fiscal year. So you can't make subsequent budget amendments once fiscal year is passed.
Tori,
Yeah.
you and I need to go offline when we're done here, maybe tomorrow or something. I had a couple questions about, as I was going through some more stuff, I caught a couple things that didn't make sense to me, so in terms of the final budget, but we'll talk about it later.
Okay, yep,
Yeah,
that's fine.
okay.
Yeah, and this is still just in draft form.
Correct.
So I don't expect it to be there isn't a budget violation, so, unless it pushes it into a budget violation,
No,
I hope
it's-
that's not the case.
No, I think the amended budget's higher than what's showing is all, so but I need to look
Okay.
into it too. I just caught that when I was going through some stuff.
Okay, yep, no problem. Just shoot me an email and we'll take a look at that. So here is the independent auditor's report on internal controls and compliance and what we're required to do under government auditing standards. So there's 3 types of internal control deficiencies that we look for when we do an audit. So we have material weaknesses, which mean that the deficiency is so significant that we believe that a material misstatement can occur if that control wasn't fixed. There's a significant deficiency, which is a lesser. So we still consider it to be significant, but it may not cause material misstatements. It's just something that we feel is significant enough to be improved upon. And then there's just general control deficiencies, which we either communicate verbally just with Ed because we don't feel it's significant enough to report in any of the letters. And then sometimes we do report it in the communication letter. So it's something that we want to let the entire city council know. And those get reported. Significant deficiencies and material weaknesses get reported here in this letter. So we did not note any significant deficiencies or material weaknesses during this year's financial statement audit. But again, that doesn't mean that they may not exist. They just may not have been identified based on the procedures that were performed. This here is the communication letter with those charged with governance. So this is that required communication that we're required to give to the city council at the end of the audit. So the significant audit matters, we address the new accounting standard that we implemented, which I briefly discussed, that GASB 101. We go over we address any estimates that we feel are significant to the financial statements. The estimates pertaining to the city that we deem significant have to do with the lives of assets and how those are depreciated, and we evaluate what goes into those assumptions to determine that it is reasonable for use in the financial statements. Pension benefits, those have various life expectancy, inflation, premium increases, investment rates. Again, we evaluated those and deemed them to be reasonable. We feel that the financial statements and disclosures are neutral, consistent, and clear. We did not encounter any difficulties in performing the audit. Corrected and uncorrected misstatements. So there are times when we are conducting our audit and we may come up with a difference in number. No, we don't consider it to be clearly trivial. And we accumulate those, and then at the end, we evaluate what we feel Ed needs to adjust to make sure that the financial statements are not materially misstated. Sometimes we just pass on them because although they're not trivial, they're still not material enough to adjust. Those we would be required to accumulate and communicate. However, all of the variances that we came up with were properly adjusted. The only adjustment that was deemed material and required to communicate to you is we had 2 accounts payables that we needed to record, and really the oversight just came in the timing of when that invoice came in and when we started our audit. The term material, it varies for the different funds, so you'll look at these amounts here and say, wow, 21,000 and 64,000 can be vastly different. However, Major Street Fund, Grant Management Fund, they have different materiality thresholds. So some are lower, some are higher, etc. So that's kind of what material means. It's not just a blanket statement or a blanket number, but that's the only adjustment that we had that was material, and it was just due to timing. We did not encounter any disagreements with management. We provided a management representation letter to Ed, which he will sign and return, and that just attests to the various requirements that management has responsibility for with the financial statements and the audit. This management consultations and other independent accountants, it kind of addresses that if you decide to consult with another accountant about auditing and accounting manners that are similar to obtaining a second opinion, typically this risk exists more when you're not getting a clean opinion. You are required to, it can be expressed on those statements, and this addresses how that should be handled. I don't expect that to be an issue. Other audit findings or issues. So as I mentioned, we do discuss a variety of matters just at the management level that they come up, and then we determine if it's significant enough to discuss with the entirety put into this letter. And although we did note, we've talked about before improvements over segregation of duties of journal entries and making sure that the person who's posting it is different than the person reviewing it, and etc. And then we have also discussed about implementing a lease policy, which I know Ed is working on. So those were really the only 2 things that have come up, not overly significant, nothing that we're very concerned about. But that's why they're not making their way into this letter, but those are essentially the matters that we discussed with Ed. The upcoming auditing or accounting standards. So starting next year, you guys will implement GASB 103, although the changes are relatively significant to how the financial statements will be presented in certain aspects. It's nothing necessarily that the city itself needs to make changes to prepare for. It's going to come more at the financial statement presentation level, which Anderson Tackman does. But that is coming. That will be in place. I do also want to mention the city has not had a single audit in the past few years, but starting with this next fiscal year, the threshold for which a single audit is required. So single audit is, under old standards, was when your federal expenditures exceeded $750,000, and it required an additional set of testing to make sure that the city was spending within compliance with those federal funds. That threshold is increased to $1 million, so now hitting that threshold of requiring it is going to be a lot harder to do. So I don't expect a single audit unless you have some big project planned in the future, but I do want to mention it because next year will be that first year of change. The other matters, those just kind of go over the required supplementary information again, and our other the supplementary information that we do provide in the financial statements. And then lastly, just restriction of use and knowing that the letter is intended for the city council and management. And it's not intended to be spread beyond those two parties. So that is really all I have. Does anybody have any questions?
You did answer some of them as you narrated, but I know things have changed, like since COVID, and more stuff is done online. Were you present at City Hall, any? Or
Not
somebody?
this year, we were not, no.
Okay. That's kind of nice about the single audit.
Yeah.
Money
Yeah.
too.
Yep.
Yeah. And I guess the other thing, because the Ramsville Regional Arts Center for the Arts, starting July 1st, and I'm not sure this is a question for you, Tori, maybe more of Ed question. How are we going to do that? Because you'll still have the utility expenses and maintenance and so on, the bigger things, but we'll be doing the other side of that. Have you given any thought how we're gonna do the audit?
Yeah, I've had extensive conversations with Bill Connor.
Okay,
Yep.
okay. All right, so I'll ask him.
Well, we're going to run a parallel for a while, and they're going to make sure they can handle what they need to do.
And I guess the last thing is, throughout the audit, I noted it said Friends of the Ramsdale.
That's the official legal name of the nonprofit. They do business as the Ramsdale Regional Center for the Arts, and they do business as the Ramsdale Theater.
Okay, huh. So, as we're like setting up, no, this is a question probably off, not for this group. That's it for me. Anyone else?
I just got a couple of simple, but who do you interview for like the internal controls? Is it just a questionnaire? Do you call on like city employees, or how does that work? What do you do?
So internal controls are gaining an understanding of the processes. So for example, we gain an understanding. So we primarily look over the internal controls related to cash receipting, cash disbursements, and payroll. Those are typically our three significant areas. We also look at overall internal controls. So making sure that the city council is reviewing financials, making sure that, board meetings are being held. The state of Michigan does establish required internal controls as well. So we take a look at those. We gain an understanding of what internal controls are in place. So for example, who can sign the checks, who's opening the mail, who's writing the checks, who's doing the bank reconciliations, things along those lines. In terms of questionnaires, we are required to inquire of various people at the organization regarding fraud. So we typically interview someone at management, if not two people involved with management. We inquire of various council members. So typically it's not only one. We inquire of employees. We consider riskier areas. For example, the marina. The marina seems to come up every single year as an area that it's harder to, and has done a good job of making sure that there are tests in place to make sure that the marina is doing what they're supposed to be doing with funds. I know that the credit card machine's down, but that is an in progress capital improvement that's being worked on, and we can see it. So internal controls are kind of made up of multiple things. I think you're thinking of the fraud questionnaires specifically, but those are the only inquiries we do, typically management, council, employee, and then we factor in risk and inquire additionally if needed.
Okay, so let's see. How many years has your firm done the audit? About.
I'd have to look back and see. I know that we extended their contract. So by the time they're done with this contract, it will have been at least 10 years. I think they might be on their third 5-year term, possibly. Or there may have been a 3-year term.
I think we just renewed it last year.
Right.
I can't remember. I want to say, yeah.
So.
That's a Ken question.
I did have another question. Since we haven't.
And I do want to touch, but
I'm sorry. You go first.
I do want to touch too, and this is something that has come up in what seems like every local government that we conduct an audit on, especially if there's a changeover in management, whether it be the city manager or treasurer, whatever the case may be. There's always, the word forensic audit runs around. And a forensic audit is when you feel that there's fraud occurring. Fraud, not necessarily, it seems to be spurred by this feeling of lack of fiscal transparency. But that is not the purpose of a forensic audit. So if you're looking for something, I always say if there is an area of concern that you specifically want us to look at, say it be the marina and you really feel that this is happening or whatnot, those are things that you can bring to the attention of the auditors, and we can spend, additional time on that. For example, sometimes we see credit cards. One of the cities wanted us to just look deeper at credit card transactions. So we can tailor our test of internal controls to focus more on these areas if that's identified. However, if in our risk assessment procedures, which are pretty, extensive, if it doesn't come to our attention to spend time on a certain matter, then we don't just spend time auditing things that we don't feel are necessary to audit. But it's just like a word going through every single city council about these forensic audits and fiscal transparency. And I think, I don't think it's overly necessary. I do think that the procedures that are performed at just a general financial statement level are sufficient to identify anything that would be of a concern. But, however, I just want to address that because it keeps coming up.
And Tori, we did a forensic audit of the Housing Commission a couple of years ago, so we're.
Yes, yep. And again, that's one that we are not involved in, but that would be an example of when a forensic audit would be appropriate, not just because you want to make sure somebody is doing their job correctly per se. It has to be that you suspect frauds occurring, which in that case it was.
Yes, yes. On that I did have a question. On that housing, do we bring their numbers in just from their audit? Is that how that's reconciled in the city?
Yes, so we take their audited financial statements as of 12/31/24, because that's their fiscal year end, and then we pull them into the financial statements. And if you read through the auditor's report, we rely on their auditor. So we don't perform any additional procedures. We rely on the auditor's work, and we actually are required to reach out to that auditor. They're required to attest to various things before we can accept responsibility. And we have to evaluate that they're a creditable auditor, that they didn't lose their license or anything along those lines. So we do have to evaluate that we feel that the Housing Commission auditor is competent and can form an opinion before we accept responsibility, or rely on their numbers. But we don't look at anything further. We take straight from their audit.
Since we haven't had a chance to really look this over yet, when do we need to have any questions or comments into Ed or you?
Ed, you can set that deadline.
Yeah, I mean,
it just comes down, this has to be,
Go ahead, Tori.
it has to be submitted. So the next steps will be, just so you kind of have a timeline, Ken, the audit partner, he will present to the entire city council on December 2nd, I believe. And then after that point is typically when we would proceed. Between now and then is when me and Ed would kind of work through anything else that he had questions on. And then after that meeting, Ed would give the okay, and we do have to submit it to the state of Michigan by the end of December. So I would say by December 2nd would be an appropriate time.
Any other questions?
No.
Well, any public comments?
We have another agenda item.
We do.
Yeah.
And what is that?
Well, the audit committee has to send a report to the city council explaining how they've discharged their duties. And so I always, pull up the wrong thing here. I always do a draft of that for you guys to review and approve.
Last page.
It's the last page of
Oh,
that.
sorry. So I did put a draft in the packet. I don't know if you didn't see your email that Kelly sent, then you wouldn't have seen this, but it's just a one-page thing. It's very similar to what we've drafted up in the past. Yeah, typo. We'll fix that. And there is one typo at the very last sentence that I'll fix before we send that on, if that's acceptable.
I think it's fine.
Somebody want to make a motion?
I make a motion, we accept the, what's it called, audit,
Annual report.
annual committee report. That we accept that
Letter with
in-
this.
with the audit. I think we should look at the audit one more, but we accept the letter that we're following the procedures. Is that correct? Is that what we're doing with that letter?
Yeah, the committee, it's one of the things that they're supposed to do. It said they shall annually present a written report of how it has discharged its duties and responsibilities. So that's what this letter serves as.
Okay.
And then, got the date. Did you second that, Jim?
Pardon?
Did you second it?
Second the motion
Yeah.
to accept it.
Okay. Take a vote?
Yes.
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 I always gotta read it over better.
Yeah.
And that's the last agenda item except for public comment.
And we still don't have any. So, Jim, you make a motion to adjourn?
I'll make a motion to adjourn.
There we go.
Thanks, Tori. We stand adjourned. I'll email you.